These days, I'm noticing a lot of chatter around a potential housing crash in 2021. According to Google Trends, this topic is trending big time since September. You'll also find opinions on YouTube from other popular YouTubers out there. I decided to tap into this. Is a housing crash coming? Let's dive deeper. What's happening, everyone? Welcome to Think Finance. My name is Raj, and on this channel, I talk about personal finance, investment ideas, money management tips, and everything that impacts our money. Right when the pandemic hit, I did a video discussing whether you should buy a house or not. Video was based on data and historic trends in the housing market during slowdowns and recessions. Bottom line story from that video was that housing is expected to remain stable, and given the other economic trends, low interest rates alone was not a reason to jump in. Indeed, interest rates may continue to fall. Buying a house is a major commitment, and given the economic conditions, you should be cautious and think through it. Since then, home prices have gone up a bit and interest rates have fallen drastically. So your monthly commitment would have been pretty much the same if you had bought a house in April or right now, more or less. Some out there believe that a major crash is on the horizon in 2021, and it might make sense to wait for the buying opportunity that is brewing as we speak. In this video, I'm going to investigate both sides of the coin, discuss the bullish and bearish theories out there, then share my 2 cents in terms of what your next move should be when it comes to housing. So, what does the housing look like today? The housing market is not only doing well, but in some areas is going crazy competitive. The median home sale price in October increased 15% year over year to $320K, the highest on record. Now, I'm not going to throw a bunch of metrics on the screen, but pick any metric out there and it supports the story. Housing market is strong. Record low mortgage rates and shortage of inventory has kept the US housing market strong with rising home prices. So why all the negativity? Why so many articles and videos out there discussing the potential housing crash in 2021? Indeed, Zillow has put together a report supporting the argument that a dip is coming. Their most likely scenario predicted a 2 to 3% drop by the end of 2020, with pending sales declining 50 to 60%. So far, they have been proved wrong. There are common themes that support the upcoming crash. Let's start with supply. The argument is that inventory is low since people are afraid to move given the pandemic. They are waiting for things to mellow down. Then there is mortgage forbearance. As part of the CARES Act, homeowners have the option to push mortgage payments out. They still have to pay it, but they have the option to defer. Now, people who have lost their jobs are most likely taking the option of forbearance and are deferring their mortgage payments. They are hoping to find another job within the next year and be back on track. These issues, unwilling to move and mortgage forbearance, are reasons for low inventory. Demand, on the other hand, keeps rising. People want to park their money in housing given the low interest rates and desire to move to larger homes given the work from home trend we are experiencing. Since the supply is low, buyers are competing for a limited number of houses out there. This is driving the home prices higher. Okay, so what's going to change in 2021? Some argue that we are going to see a spike in COVID-19 cases in 2021. People will continue to be out of jobs and banks will no longer be able to offer forbearance. This will force people to sell their houses and flood the market with inventory. Supply will surpass demand and prices will eventually correct. CoreLogic, which owned the Case-Shiller Home Price Index, released a report in summer forecasting that the prices of single-family houses would be down 6.6% year over year by March 2021. Their position is similar. Record low mortgage prices and tight supply has led to increase in home prices. By the end of summer, which is gone, unemployment and recession pressure will slow down the buying activity, resulting in a decline in home prices. Based on the recent data, these guys have been wrong as well. Having said that, Zillow and CoreLogic and the YouTube bears out there have fair arguments, something to read into. Now let's talk about the bull side of the story. The bear's case is based on three themes: ending of forbearance plan, continued unemployment pressure, and prolonged pandemic. In order for the housing market to crash due to too many loans going into default when forbearance program ends, the number of loans in the program needs to grow. But data released by Black Knight just recently shows the number of such loans fell by 18% and now stands at 2.97 million. The number isn't growing, it's slowly shrinking, meaning people are exiting forbearance plan and are able to pay their mortgage. Just for reference, in 2008 subprime mess, we had over 10 million bad loans at the peak, mostly due to poor lending standards and negative equity in the house. Neither of these exist today. Indeed, lenders have tighter lending requirements and most people have built equity in their homes. Regarding the forbearance plan ending, chances are it might be extended or modified to support homeowners, irrespective of who the next president is. As I said earlier, active forbearance plans are shrinking. Homeowners are starting to exit the plan and pay their mortgage. One of the reasons for this change could be jobs are coming back. The unemployment rate dropped to 7.9% in September compared to 8.4% in August, and is trending in the right direction. We will get our hands around the pandemic. Earlier this week, FDA approved a treatment that Gilead offers to treat the bug. With some of the smartest minds across the world working, it is a matter of time before we get an approved vaccine. Then there are these other reasons to stay bullish. Mortgage rates are at record low. Granted, they are expected to remain low for a while, and this should not be the only reason to get a house. Our government is committed to doing whatever it takes to help the American people and keep the economy afloat. Irrespective of who the president is, I don't think this is going to change for a while. The work from home trend is here to stay. People are investing in bigger and better houses since most of us are spending more time home. With low interest rates, it makes sense. Finally, people have savings, and with all the printing of money, value of dollar keeps going down. In other words, purchasing power continues to decline. That hamburger at McDonald's is gonna cost you more. Gold and real estate is a way to hedge against inflation. There is a reason why gold has soared recently. Where am I going with this? See, you either have to be in the bull's camp or the bear's camp. But then again, does it really matter? A house is a long-term bet, a bet that you're making beyond just 2021. I don't think anyone can predict the future, but it always makes sense to make an informed decision. With that said, I'm a buyer. Here are my reasons why. For most of us, timing the market is a stupid idea. There were similar theories in 2012, 2018, and recently in May, when we had analysts banging the table that a housing crash is coming. We are sitting at all-time highs. When the market does crash, we won't even have time to blink and it will just happen. We bought our first house in 2008 peaks. It felt like a brilliant decision then, but right after we moved in, the market crashed. Today, we are fine, and it has built us a lot of equity. Point being, timing the market is stupid. Next, we have access to cheap money. Granted, low interest rate should not be the only reason to jump in. But man, we are talking about rock bottom interest rates. With rising debt and falling dollar, real estate is a way to hedge and get more bang for your dollar. In the current environment, a dollar invested in real estate can offer far more value. Finally, getting a house is such a personal decision. If I'm in the market for a new house, do you think I'll let go a house on the basis of a hypothesis out there, the great 2021 housing crash? Housing is such an emotional decision as well. A lot needs to go right to close on a deal. You need to like the house, location, layout, size, maybe something else. Then you have to deal with competition, financing, insurance, inspection, and closing. Now, maybe the market will crash like it did for us in 2008. But you're not buying for 2021 only. You're buying a house that you expect to live in for a long time to come. I hope this was insightful. Thanks for tuning in. Until next time, peace.